Welcome back, savvy investors. Today we're diving into some crucial tips you must know before diving into the world of stock investing. From understanding your circle of competence to analyzing profit and loss, we've got you covered with all the details. You need to know this stuff, folks. It's essential. We're talking about your hard-earned money here. So buckle up, get ready to learn, and let's make some money. All right, people, first things first, circle of competence. What does that even mean? It means stick to what you know. Are you a tech whiz? Then maybe tech stocks are your sweet spot. Do you love retail? Then focus on those retail giants. Don't go chasing some fancy biotech stock just because everyone else is. You got to understand the business inside and out. If you don't, you're just gambling, not investing, and that's a recipe for disaster. Remember, knowledge is power. Listen up, investors. Profit and loss, that's what it's all about. You've got to look at the company's earnings, folks. Are they making money? Are they growing? Are they losing money faster than a leaking faucet? You need to dissect those financial statements. Look at their revenue, their costs, and their bottom line. Is the company profitable? Are they on an upward trajectory? Or are they headed straight for the dumpster? Follow the money, folks. That's where the real story is. Hey, investors, don't forget about shareholding patterns. Who owns the company? Are insiders buying or selling? Are big institutions gobbling up shares? You got to know who's betting on the company and who's heading for the exits. If the big players are loading up, that's a bullish signal. But if they're dumping shares, watch out below. Shareholding patterns can give you valuable clues about the company's future prospects. Now let's talk about pledged shares. This is a big one, folks. Pledged shares are shares that promoters or major shareholders have used as collateral for loans. High levels of pledged shares? That's a major red flag. It could mean the company is in trouble and those shares could be dumped on the market if things go south. Keep an eye on pledged shares, folks. It's a critical indicator of financial health. Dividends, baby. Who doesn't love a good dividend? It's like getting paid to own a piece of the company. Look at the dividend yield, folks. It tells you how much cash the company is paying out relative to its stock price. A high dividend yield can be a sign of a mature, stable company. But make sure that dividend is sustainable. You don't want to get caught holding the bag if the company can't afford to keep paying those dividends. Debt and cash flow. Two sides of the same coin, folks. You got to look at how much debt the company is carrying. Is it manageable? Or are they drowning in red ink? And more importantly, how's their cash flow? Are they generating enough cash to service that debt and grow their business? A strong cash flow is crucial for a company's long-term survival. Don't ignore debt and cash flow, folks. It's a recipe for disaster. Now let's talk about book value and the price-to-book ratio. Book value tells you the net worth of the company. It's like looking at the company's assets minus its liabilities, and the price-to-book ratio compares the stock price to the book value. A low price-to-book ratio can indicate a value stock, but remember, there's a reason it might be cheap. Do your homework. Make sure the company is fundamentally sound and not just a value trap. Armed with this essential information, you're now better equipped to make informed investment decisions. Remember to do your research, stay within your circle of competence, and carefully analyze these key factors before diving into the stock market. Happy investing and may your portfolios thrive.